Let's see. Let's see.
So
We good?
this is the microphone for the Zoom and the room, and then obviously you've got yours.
Yeah.
And then I'll give a quick presentation, and then introduce you.
Right.
Feel free to speak for however long you want, and we'll do. But take questions anytime. If you want Q&A session, and then we'll
Let's
wrap
see
it
how
up.
it works. Yeah.
Oh wait, sorry. Window came up, so you just started.
I need some more maybe. Yeah. No. Yeah, it needs to be activated maybe. No. No. Let me turn it off and on again. No.
Yeah, I can try that.
Yeah, did it? Was on.
Replug it. You can do that.
Yeah.
Try it again.
Done. Yeah, here we go.
Okay, works?
Yeah. Awesome.
Okay. Stand good here. Welcome everyone. My name is Brett Young. Welcome to the meeting. Golden Gate University hosted a TSAA meeting with our guest speaker, Wieland. I am a professor at Golden Gate, an adjunct professor teaching technical analysis courses as part of the Master's of Science and Finance degree. As I'll explain, is a new program in that the technical analysis concentration was launched a little under a year ago, which is a new offering by Golden Gate. Previously, the TSAA has had a long relationship with Golden Gate University due to some college professors who have taught here before, and better stick to my notes. The culmination of which of many years of teaching TA courses at Golden Gate was a certificate program that was offered and involved taking intermediate or beginner and intermediate level courses in technical analysis. But that was really a specialization that was, it seemed, outside of the rest of the curriculum being taught here in the degrees, in that some of the courses were considered electives that would count towards a degree, but one could pursue just the certificate, and not take any other courses. This concentration is intended to be a complement to the Master's of Science and Finance degree, which personally I think is, well, first off, it is unique amongst any academic technical analysis offering in the world, as far as I know. And number two, it very much aligns with what other well-rounded educations in finance would provide you. For example, a professional designation in like the CMT or the CFTE, along with, say, a bachelor's or a master's in finance, right? So this is the best of both worlds. And I want to just recognize Department Chair Neetha Manohar, whose brainchild this was, and through a lot of labor by she and I, we got it going, and so far I think it's a success, and we're looking forward to having a snowball effect. So that being said, without talking too much about the degree program all night, I want to encourage you, practitioners of technical analysis, students of finance, to tell people, get the word out to people who are looking, shopping for a master's in finance, a master's of science in finance degree, that Golden Gate University has not only an attractive offering for a degree that is going to be well respected by employers, but also at a very reasonable price, that has a technical analysis component to it. And if that isn't going to differentiate you in the job when you're shopping for a job, I don't know what is. It worked very well for me over the course of my career to differentiate myself from other people on Wall Street. So please let me know if you have any questions about it, and contact me. For the people on Zoom, feel free to send me an email, or just send an email to info@tsaa.sf.org, and I'll speak to you. I also want to thank the organizers of the meeting, Bruce Frazier and Anuj Batra and Mike Jones, who's here in attendance tonight, for helping to coordinate the event. Thanks. Okay, let's introduce our speaker. Okay, tonight's speaker is Wieland. He's the president of the International Federation of Technical Analysts, or IFTA. I want to speak a little bit about what IFTA is, and I would be happy if Wieland would as well. IFTA is an international organization with members in 22 countries around the world. It is essentially, in a nutshell, a group of technical analysis societies like the TSAA-SF that have a shared mission of promoting the use of technical analysis, doing research, education, and providing a platform for people from all kinds of different countries and cultures to share information, and especially about technical analysis, not just markets. IFTA was first formed in 1986 by 5 member societies, one of which was the TSAA in San Francisco. The TSAA has been very closely affiliated with Golden Gate over the years for the reasons I just explained. And one of those members that I mentioned, Bruce Frazier, who was a professor here long before I was, is also a IFTA board member. IFTA is the sanctioning body for a certification program called the Certified Financial Technician, or CFTE. Those people who complete the CFTE can also earn the Master of Financial Technical Analysis, or MFTA. And if you want to learn more about IFTA and where it is around the world, learn more about the certifications, you can visit ifta.org. Okay, moving on from IFTA. Wieland is also a successful trader and serves as a coach and trainer for people interested in sharpening their trading skills. He's the founder and CEO of Torero Trader School, which offers courses in both simple trading strategies and advanced methods. You can find out more information by Googling Torero Trader School or just paying attention to tonight's lecture. He's also authored 2 books, including this one right here, which I'll show you. And it's called Risk and Money Management, and you can come up and take a look at it after the presentation. Another book he wrote is called 55 Reasons to Become a Trader. I think you have to speak German or read German to be able to do that.
Well, it's a good opportunity to learn another language already, right? So.
But amazingly, Risk and Money Management is very popular. It's been translated into 7 languages.
Yeah.
And he's also been the author of numerous articles in leading financial magazines. And he's also a sought-after speaker, very frequently all destinations around the world. So we're very lucky to have him present for us tonight. So please help me in welcoming him.
Thank you so much, everybody. Brad, thank you so much for this beautiful, wonderful introduction of my person. And yeah, I'm very, very, very honored to be here tonight, or this day, this afternoon, together with you at Golden Gate University, which is amazing. Because yes, I know it's some kind of years, like a couple of decades already since I've been on that side of the bench, but you never stop learning. And therefore, I really enjoy always having presentations, discussions with colleagues, with traders, with beginners, but also with advanced, experienced experts, professionals, you name it, because I always learn from these questions and also from the discussions. And it's really, really important to never stop learning because, as you know, I mean, we're in San Francisco here. Everything changes. You know, people were talking about social media. Then everybody was talking about the blockchain. Now everybody's talking about AI. And this happens all here in some other places too. But at the end, this is something like the hub for everything. And when it comes to change, I think San Francisco is quite an example to push and to provide this change as well. So therefore, that's what we do. We learn how things work. And of course, we try to be better in doing this, right? So, and also I like to express my thanks to Bruce Fraser, Roman Bogamazov, who really welcomed me here. The day when I arrived, we went out, I saw a lot of the city, we had a lot of discussions. And thank you so much here for inviting me to this great and wonderful place. This place where all big technical analysts already have been and spoke. And therefore, I'm really, really honored to go into these footsteps, even though my feet are quite big already. So anyway, these footsteps are big, and I'm really happy to be here as well. Right, so let's see what we can do with the slides.
There we go.
Here we go. Oh, yeah, here we go, exactly.
Gotcha.
Perfect. So how to catch the big swings with one simple strategy. I mean, first of all, we need to have some swings, which is not really happening right now. So that's number one problem. So how to get into a market which doesn't have any swings? Okay, we can go like in a smaller time frame. You know, you start as an investor, end up as day trader in a 1 minute chart, and hoping to get into these wild markets at all. But still, let's talk about how to go with the swings. No matter if you catch them in a minute or a weekly chart, there will always be some swings. But before we do this, of course, there's a risk disclosure, there's a disclaimer, and just that you know, and I think you already do, that if you trade, of course, you trade on behalf of your own responsibility and, of course, on behalf of your own risk. That's why I wrote this book about risk and money management. You know, that we not just put everything in one basket and everything on one card, so that we just use clever management, clever strategies to make sure that we survive this crazy game we call trading, right? So if you agree, I'm happy to continue. All right, perfect. And then, let's see how this works.
Trying my best.
That's good, because it was deactivated. Now we're good. So again, yeah, this is me, and Brad, you already mentioned everything, and luckily I'm here and not just on the screen. So yeah, what's not mentioned and stated there is number one, I'm from Germany. Maybe you already hear this. I have, of course, that slight accent, but not that weird one like Arnold. He's from Austria, right? So that's quite a difference, even though most people don't really know, but yeah, there's a difference. And number two, I'm a world traveler. So I travel on a constant basis. I never return, not immediately. Of course, I return once in a while, but not like going back and forth. I just go forward, which is pretty cool because as a trader, you can do this. I'm like a digital nomad, if you want to put it this way, but not really on for, let's say, projects, even though I have a lot, but I can work everywhere, which is pretty cool. So, and even though without asking for allowance, which is even more cool, right? And as a trader, you don't even have to do this, just mentioning, right? Okay, now let's go with, it's really important that this one is activated so that I can go with that one. Okay, so when it comes swings or swing trading, I mean, we all have some ideas and some strategies already in mind. We have learned a lot of strategies already. Here are two books in mine about management, but about technical analysis. You learn a lot. And then you see something weird like this. What is this? It's a weekly chart of the S&P 500. This is the future. And as we see on a beautiful, beautiful basis, that we have, like right here, we have the pandemic crash in 2020. Then you see that after that crash, this crazy rally started. We had some kind of consolidation, which is a correction. It took some time to move upward again. And as we already know right now, it's somewhere over there. And it will never stop, because this is a time where everything is different. No, it's not. Of course, it's not different. So the question is, if you look at a chart like this, and if you want to find some ideas on how to enter a market, and if you go with corrections, or if you want to go with sideways, with breakouts, there are countless of ideas and strategies just to go into this market to trade it. You can go as a scalper, really short term. You can go for long term. You can go with a trend. You can go against the trend. You can do everything. And the more you learn, the more ideas you have to go into a market and to trade it. And I remember, it has been years ago, that there was a colleague, and he was like on the screen saying, I have to go to the screen as well. Try to, right. So it's better here, but yeah, and I go back. And I remember the story because I was talking to this colleague, and he said, Wieland, I am a CFTE, I'm a certified financial technician. I have always some ideas how to open a trade. And I can imagine if you're at that level, you have so many ideas, so many strategies to follow that you literally open a trade for whatever happens. Whenever the market moves, you open a trade. Question is if this is really the right idea to go for professional trading. I'm not sure. And because we have all this toolbox, which is filled to the top, where the lid isn't even to be closed. So it's so full that we are literally overwhelmed in picking the right strategy. And therefore, I was asking myself if I could reduce this complexity which is inside my toolbox, and if there is just one single strategy which is good for sideways markets, which is good for market corrections, like the pullback, and also which is good for trend continuations. One single strategy, just one. What do you think? Is there one? Just one? Yeah? Oh, okay. Yes, there is. But how can it look like? And how can we really find a strategy which is good for all these situations? And I call the strategy the expander. Another question is, what are the ingredients of the strategy? Number one, the Bollinger Bands. Who is familiar with the Bollinger Bands? We all should be, right? Because these are not just that they are a classic, but they are also a very, very easy to use tool if you fully understand what's behind it. And I think I understood quite a bit, at least. So what are Bollinger Bands? Let's hear John first. He says Bollinger Bands are channel lines drawn in and around the price structure in a chart. Their purpose is to establish the relative definitions of highs and lows. Prices near the upper band are high, and prices near the lower band are low. Period. That's what he says. Now, usually, if we read a book, how long do we look at a quote like this? Second, maybe two, and then we turn over the page, hope for the next big thing to happen on the other side, right? So I want to let this sink in a bit and discuss this a bit with you, because it's very, very important to understand what this really means. Because usually, if we are looking at a price, and if we want to enter a trade, if we're looking for a point for investment, what are we looking for? For a reasonable price, right? For buying should be cheap. Now the question is, what is cheap? What is a good price? What do you think is NVIDIA right now, today, in this moment, absolutely overpriced, absolutely too high in its price? What do you think? Yes. Of course, yes. No. Why do you think so? Well, it's a feeling. I read some news. There's an analyst saying this, which means we don't know, right? Bitcoin, is it absolutely too high? It's a lovely discussion. It doesn't have any worth at all. There's nothing inside. It's worthless. No, it's the number one thing. Nobody knows. We cannot say if a price is absolutely too high or if a price is absolutely too low. We don't know it. We just don't know it. Gold, too high or too low? I don't know. And therefore, how can we make ever a decision about a trade? How can we ever say, okay, now is the right time to buy? Because this is the absolute highest price ever possible. And we all agree on this. It's not possible. Because prices, they move for whatever reason. Supply and demand, actually. But why? We don't know. That's why we have these books. And still we don't know. That's the problem, right? That's the biggest problem. Still we don't know. And therefore, I love John's invention. And I was happy to meet him and say this, John, this was really a game changer for me. Because look at this. What does this mean? We're not talking about the highest price ever possible or the lowest price imaginable. We are talking about relatively high and relatively low. And this is a complete game changer because as we don't know what is absolutely too high or too low, for sure we know what is relatively too high or too low. Because what do we need if we want to make a decision about a relatively high or relatively low? What do we need? We need something to compare. Relative to what? To its own average. It's simple as it is. And realizing this with these two sentences in this quote changed everything, for me at least. And therefore, I thought, okay, that's quite a big deal. This gives me the answer I was looking for. This is, for me, the basis to make decisions. Now the question is, do I really open a trade just price is relatively high or relatively low? Of course not. I'm not crazy. Of course you're not doing this. You need some more, but this is the first idea that I see, okay, whenever the price goes into the direction to the upper or lower band, things get interesting for me. This is like a heads up. And then I have just to see what happens afterwards. Now let's see, why are the Bollinger Bands are so successful and so easy to apply? Ah, long far gone. Good old times. Who knows that one? Yeah. It's 10 Deutschmarks. One of the strongest currencies ever. That's why we gave it away for the euro. We were really clever doing this. Right? But anyway, it's not about 10 Deutschmarks, and I don't want to really cry after that, but I did this for years, so it's okay now. Now, anyway, I want to show you something else. Who knows that one, that guy? Yes, Carl Friedrich Gauss, and he gave us that one, the Gauss curve. It's a bell curve. Usually we take this for granted, but of course somebody has to describe this the first time, and he did this, obviously. So the bell curve is what we are looking at when we're using the Bollinger Bands. And that's what makes it so powerful. So what is the bell curve about? This is from Wikipedia, by the way. So it's not really something sophisticated. You can find it on Wikipedia. But anyway, it's very interesting to see and also to understand why Bollinger Bands are so powerful and why I'm so stoked with them, right? So let's say we have some random allocated events, results, like a price in the stock market is a random result. They're random. each single one is random because for whatever reason, people agree on the price. Okay, buy and sell, let's go. Done deal. You feel happy about it, right?
Yeah.
Me too. And this is one of the craziest things. Two people come together, do the exact opposite, and feel happy about it. Both feel like a winner, right? So that's the stock market. And therefore, prices are randomly. And if we have like a number of prices, number of random results, they show up like this, they allocate like this in a bell curve. And if you look at it and you put some deviation on it, this is a standard deviation, -1, +1. So the standard deviation says if you're between -1 and +1 standard deviation, you have to both sides 34.1% of all prices, in this case, or all results, they are in this range. This means 68.2% of all results are between -1 and +1 standard deviation. Now, as a trader, looking for volatility, looking for special events, looking for a distance to go, otherwise, why should I enter a trade? Is this interesting for me? Do I look at this? No, I don't look at this. Why should I? It's nothing special. This is noise. That's the market noise. Goes back and forth, a couple of points here, a couple of cents there. 3 pips here, 4 pips there. That's nothing special. It's not a big move. But if you look to the sides, you see, the more you go, or the higher or lower, depending, you go with the standard deviation, the more rare the results get. So this means if you're between -1 and 2, you just have 13.6 each side of results, allocated results. And if you put everything together, and as John did this, he did the standard deviation of minus and +2 from the simple moving average 20. So we come here with 68.2 and 27.2. So brings us to 94.8. 94.4, whatever. Let's say 95%. So let's say we have 95% of all prices are between -2 and +2. Now what happens with the prices and results outside? You see there. Number 1, rare events. Number 2, what is the conclusion with this? Yeah, we have a mean reversion coming up. Not now in this moment, but coming up. Pretty logical, right? This is what I'm looking for. And I'm looking for the move from here to there. That's what I'm looking for. And if it's really cool, I'm looking for the move from here to there and from there to here. This is where I get interested and feel like, yeah, that's the way to go. That's something I want to look at. And the cool thing is, I just need one indicator for this. And it's not really an indicator at all. It's just standard deviation. So it's very easy to apply, easy to see, easy to follow, easy to understand. Because, I mean, how can you not understand this? You know, it's like rare. Not happens often. The definition of rare. So that's what also John did. And he did some backtesting. With this backtesting back then, it was like with the standard deviation of plus and -2, it's 20 time units, which is simple moving average 20. Most markets, and that was a daily chart, most markets are between 88 and 89% of the prices. All these prices are enclosed by the bands. That is, if you put both things together, you have between 90 and 95% of all random results of all prices within the bands, and therefore totally out of interest for me as a trader, I'm pretty sure for you too. And if you put this on this price, you see, they are all inside the bands. Totally not interesting. What should I trade here? When should I enter? When should I exit? Because here, it's not relatively low, it's not relatively high. It's just fair priced. Why should I trade? It's not overpriced, it's not underpriced. Here we go. Oversold. Big oversold with a potential for a mean reversion. And I mean, this is -2, this is maybe -3, -4, whatever. And this means that in this moment, in that moment, in this situation, we hear like bells ringing. Wake up, wake up, wake up, something's coming up. Time to take action soon. And see what happens. Every time the price is outside, it returns. Not immediately, so don't go long just because it touches it. The bands, just wait until something returns. Then you already see every time prices, after a couple of moments, the price returns. Not always like powerful and impactful, but you see, always the case. It's the nature of the markets, it's the structure of the markets, because nothing goes to the moon without a correction. Nothing drops down to the bottom without a correction, unless it's really broke. Okay, different story. But even though, even in this moment, people feel like, oh, I'm gonna buy, maybe somebody buys the company, you know? So nothing really just goes into one direction. And this is what I try to catch with the Bollinger Bands. And now the question is, what can we do and how can we really go into the markets? When do we really know that this, what we are waiting for, already is happening? And there's a big difference to say, yeah, it's most likely that it happens, and to say, yes, it right now happens. It's very important also to distinguish this, right? So I want to look at candlesticks. Who is familiar with candlesticks? Okay, some can still learn a bit. Anyway, I'm not shy. I asked the same question in Tokyo. And I tried to explain the Japanese in Tokyo how candlesticks work. You need to be a little bit crazy to do this anyway, but still here I am. So candlesticks. Let's take a closer look at candlesticks. And I like to quote Steve Nissen or Steve Nissen? Nissen. If you don't know, I can move forward with.
Sounds pretty American.
Nissen, yeah, obviously. So Steve Nissen. So let's hear him. No other chart method can compete with the candles when it comes to diagnosing the health of the market. And it's true. Literally, it's like you're feeling the pulse of the market petitions. You know, like you see what's going on. You look like in the mind of people who are trading. You see the pain of the market participants. You literally feel it. And that's why I love candlesticks so much. Now let's look at some of these. Now we have two candles here, red and green, obviously. I mean, of course, you can change the colors in your software, not a big deal. But most people like red and green, and therefore we go with that one. Now, what can we see with that? We have an open price, which appears to be the high as well. We have a low, we have a closing price. So obviously, red candle. We had strong selling, and the sellers won the session. So that's what it is. And here we have the same. So we have an opening price, which appears to be the low. We have a high, and we have a close of the session. And obviously, buyers are stronger. Now, what can we see? What can we read from these candlesticks? What is the interpretation? Who is really stronger? Who is strong? Sellers, right? What is most likely? Most likely, we're talking about, it's not a guarantee, right? So we're talking about what is most likely to happen. What is most likely to happen after a candlestick like this? That market drops. Why do you think it should go up now? And it's very interesting. People tend to do this, but why? Why do you think so? Mhm. 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 Yeah. Mhm. Yeah. Yeah, I'm happy that you mentioned this because a lot of people get tempted to do exactly this. They feel like, oh wow, price has fallen so much and it's gone so deep. I gotta buy because it has to reverse now. No, it doesn't have to reverse. Unfortunately not. Nvidia needs to reverse now. No, there's no need to. That's the problem. If you jump in, you know the expression, never catch a falling knife? Where does it come from? If the market falls, it falls. And it's more about the probability of the next move. And you see a candlestick like this. This is the picture of power. So here, sellers are very strong. Where's buying? Do you see any buying here? There's no buying. Do you see any selling here? There's no selling. And to make it even better, let's see. I'd like to paint a bit, therefore I put this in here and blind myself. But it's so important to understand. Where is it? Okay. Now let's imagine you have a resistance or a support line right here. What do you think? Resistance and support, are they broken? For sure they're broken. And that's very important to understand. So if you see resistance area right here, assume it to be broken. If you see a support area right here, assume it, consider it as broken. Because there's no buying power, there's no selling power right here. So that's what we can read from the candlesticks. Now let's look at those. What happens here? We have the opening price, a high, a low, closing price, and same here. Is this the same picture, the same idea? Not so much, right? Not so much. So what happened here? Let's see. Yeah. It's like something is wrong here. You see that the price moves up or down, depending, building a high, and all of a sudden, for whatever reason, the price drops or rises, depending, right? So what happens here? Those who felt strong, powerful, already were calling for the Maserati, right? They hope to cancel it after the session. Those who were winners are now losers. So something changed. It's like the whole idea of the market move is gone, and you have the exact opposite. And those people who have been buyers right here, and also there's somebody buying here. Losers, 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 losers. Losers, 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 losers. Anybody familiar with this one? Yeah, we all are. And now that's why we also know what happens next. What happens next when the price goes through the low? When the price breaks the low, what happens? Most likely, more selling. Why? Because people need to make a decision for the risk management. Because they need to exit, maybe, most likely, they need to exit their position, their losing position, because what else can they do? Sit on their losses? and wait until they get broke? Of course not. Therefore, it's so important to understand also psychology, the mental state of the traders, the market participants. And this is not different from what I feel or you feel, we all feel. And if this is true, now guess what this is? This one here has been read in total. And here at the low, there's also this one single poor guy selling here, making the last price. Like, deal. Yes, deal. So how do you feel here? How could this happen? And the same is here. Deal. At least you made history. At least people can see what we have done for eternity in the charts. So that's a good point. But of course, the loss is incredible if you find yourself over there. And you have to make a decision. You need to protect your capital. You need to protect your account. You need to protect your money. And you will do this the moment the price breaks the high, right? I mean, there's no other option. Of course, there are some people like doing, yeah, I'm gonna buy more or sell more. I just add to the position. We all did this, didn't we? Yeah. What happens then? You can start all over again with your account. And what happens? I mean, to be fair, usually people just go with a small amount first time in the markets, they try some. Usually you will not kill your financial future with this. But once in a while, there are people doing that. And if you're institutional and working for a fund or whatever firm, wow, I don't want to go into that meeting. Definitely not. So you better make a decision to close your losing position. And that's why it's so important to understand this, what we see with these three candlesticks, the mechanics of what is going on inside of the minds of the market participants, because they are not different from ours. They feel the same pain, and this is a picture of pain. So the longer it is, the lower shadow or the upper shadow, right? So the longer it is, the bigger is the pain, the bigger is the loss, the bigger is the trouble market participants are in. In general, not, because this is pure price action. This is what reflects the price movement in this session. If it's a minute, this is what happened in the minute. Right? That's why I love candlesticks. This is happening right now. No mathematics, nothing. Just right now. If it's a week, it takes a bit longer to develop, but it's the same message. If you start like happy on Monday, you might feel very unlucky on Friday, right? And vice versa. So therefore, it doesn't matter what time frame, but what you also have to consider and take into account is that if you trade on a 1 minute chart, this signal is just valid on a 1 minute chart. So if you switch the time frames, you might find yourself in no man's land according to the signal. So that's very important to understand. It's different if you go from a weekly chart, like let's say in the 60 minutes chart. So therefore you can use that signal too, because it's already going on. But yeah, you better stick in the window you're trading in, or you find the signal in. Now can we use them? We call this, and you know this, I hope, hammer and shooting star, right? So hammer and shooting star, how do I trade them, or how do I like to trade them? So entry, of course, I use stop entry, stop buy in this case, and I have the stop loss underneath the low. And as you can see, I also add a little buffer. Might be a point, a pip, a cent, whatever. An extra buffer. Why? Yeah, it's like an insurance. Because do you know, have you experienced these moves which just spike with 1 point above or below, and you could stop in or out? This feels really great. Right? This feels really great. And this is, of course, we cannot avoid being stopped out or getting stopped out or getting stopped in. We cannot avoid it at all. But definitely, I want to make the market to prove me that he's serious about this next move. That's why I add a little buffer. But of course, we always have to consider, and this is where we also have to think about the time frames. Let's say you're the 1 minute chart and you have this candlestick and this one has, let's say, 5 points, and you add the spread and you add 1 point here and 1 point there, you already have like 8 points or 9. So question is if the trade really makes sense at all after this. If you're on a weekly chart and you add 5 points here and 5 points there, it doesn't make any difference in your money management. So that's also very important to understand that this works quite well if you have a higher time frame. If you're intraday and very, very short term, you have your position with this. So that's what you need to know, or you higher your risk, depending, right? So that's what I like to look at. And obviously, the prerequisite is that we have a down move, not talking about a downtrend. We don't need to have a downtrend, just need a down move. And then we need that one. What else is needed for this candlestick to be valid? Who knows? Again?
Confirmation.
Confirmation? Yeah, this is the break of the high. Yeah, you can add volume, but for me, candlestick is everything. No, it's pretty simple. Talking about the pain, to make it really valid means 1 to 2. So the size of the body, candlestick's body, is 1, and the size of the shadow is 2, at least. The longer, the better. 1 to 5, this is real pain. This is real pain. On the one hand, on the other hand, it's most of the move is already done. So also something, well, kind of trade-off. So here we have some examples of the hammer, and this is exactly what I mean. Here we have not really 2 to 1, it's like 1 to 1, something like that. Not as powerful, doesn't have the impact I'm looking for. This one here, that's a hammer. That's a nice hammer, right? And see what happens. If you're trend following and you're really aggressive, you might enter here maybe. But to make it really clear, low, high, low, break, maybe you enter here and see the difference. So if you know about candlesticks, you're very, very early, or you can be very early, maybe. And also if you consider this a V-shaped reversal, it might be the only chance to enter the market. Also interesting, right? And we're not talking even about the Bollinger Bands here, we just look at the candlesticks. So this is very, very interesting and very, very important to understand. And then you can still follow with classic 1, 2, 3 strategy, breakouts, whatever you like.
Maybe you were wrong that next day and you're looking at the market down.
Yeah, it happens.
Second guess yourself at that point. Did you use 6 or 2 hammers better?
Yeah, you can wait for 2 hammers. The problem is they will not appear. Sometimes yes, sometimes no. You have something like this here, right? That's why I like the stop sell. I mean, that's not a shooting star at all, but if you said, oh wow, I see selling is coming in, you have to stop sell, nothing happens. The market has to prove to me about the seriousness of the next move. You know, it's like, I want to do this now, and I'll show you I can do it. You know, things like that. And this is what happens here. Yes, I know it's not a hammer, but it's the same situation. You feel like, I see some buying coming in after, you know, like what you mentioned. Oh, it dropped so hard, I'm gonna buy now. No, it's not over. Now it's over. We need to distinguish. These little things make a huge difference. But of course, I mean, you can try it. You have a stop loss, you get stopped out, not a big deal. Let's say 1% done. But here, that's the opportunity. You make at least, let's say 2 or whatever. You know, and that's professional trading, where you feel like, okay, I risk a bit, but I have the opportunity and the probability to get some more out of it that I have taken into risk. And the same is here. Okay, you want to go with trend following from the correction, from the reversal. Here you go, shooting star. And there we go. Best entry possible. Trend following people, trend following traders, they enter here. Look, candlestick, support zone broken, consider it to be broken. That's powerful, picture of power. But if you enter here, you're already big in profits. And maybe you want to hand over. Okay, you can have it. Deal. Again, next deal. Right? So this is how we can use, how I use the candlesticks. This is how we can do it. So where do we have these reversal signs in the chart without the bands? Just in the weekly S&P 500. Here we go. So we have hammer and shooting star, and we have the variations, which is dark cloud cover, which is piercing pattern. We have some evening star, some morning star. We have some bullish and bearish engulfings. I'm not sure if they are Rami, but anyway, so we have some variations, but if you bring them together, they all end up to be the same hammer and shooting star from the logic, right? Just take a little bit more. Oh, nobody could see the crash of the pandemic. It's true. We couldn't see it. But what could we see? A reversal coming in. Of course, we don't know how far it goes. I mean, we're not Nostradamus, right? And we don't have the glass ball, but at least there was an opportunity to exit. If you can read the market, at least you could have gone out of your stocks. If you read the market, you could have gone into the market again. And in between, there's nothing to do. I mean, we're just talking about a couple of weeks anyway. But these were very intense weeks, right? For people being invested, it's like a diet. So nice to hear, piercing pattern. I mean, these are strong candles. Position quite small, right? Obviously, but then you can add up here. Now, next, dark cloud cover, hammer, bullish engulfing, and so on and so on. Evening star, bearish engulfing, hammer, hammer, evening star. Most likely bullish engulfing, bearish engulfing, things like that. So not bad at all. Just a few, but if you play your cards right, not a big deal. No need to worry. Even though if you just go on Sundays, look at the weekly charts, just a couple of trades a year. But these ones are the right ones. So not bad, right? Just reading the candlesticks. Yeah. So let's put things together. Let's build a strategy with it, because now we know the Bollinger Bands and now we know about the candlesticks. And now let's see what really makes sense. First of all, and we already discussed this, the touch of a band itself is never a signal. Please don't do this. Don't buy, don't sell because it touches the band. It's a very bad and very cost-intense idea. Now, we put things together and you see we have still the same situations. Obviously, the bands do also quite a good job. And if you're really looking for years at charts, you don't even need the bands anymore, because you already know, yeah, I know you. Here, not so clear, but in general, you know, like a hard move usually is outside of the bands. A hard push is usually outside of the bands. So, and then we also have some situations which are not really cool, like, you know, like these here, like here, where it's a bit choppy. So let's erase them, because they are inside of the bands. And as we already knew, those are not the trades or the situation I'm looking at. So therefore, I put them away, I take them out. So here we go. Now we have 1, 2, 3, 4, 5, 5.5, depending when you exit, winning trades with a strategy. So, not bad, right? And I know, yes, you could spot this also without the bands, but how about that one? Gold, the absolute top so far. Right now we have new highs again, or almost new highs. But still, we're talking about swings. And if this one has a really big impact, it really holds. That's the opportunity we have. Like we can really, with a stop loss at a point in the market, at a point in the chart where the market is not strong enough to get back again. That's the opportunity we have. And therefore, you have a test here, but not strong enough. Here, yeah, you just trade the correction. So what do you think? Where might be my very first profit target here? You know where I have my stop loss, but what might be the profit target? And I heard it at the very beginning. It was mean reversion. Where's the first profit target for me? That's a mean. Pretty logical, right? Pretty obvious, because now we're back to zero. That's the mean. The simple moving average 20. What happens here? Look what happens if when the price touches the simple moving average 20. We have not always, but quite a lot of times we have some kind of price reaction, some kinds of reversals, some kinds of pullback. So I better secure a bit of my profit. I lower my position. Why? Because if things go choppy and the price moves upward again, which it didn't do, but just in case, like here, I could add easily again, no problem. But I secure something and make sure that I already am break even. Yeah, like this. Well, as I'm more an active trader, which means I'm doing more intraday and swing on a daily basis, so I really look at the charts, I would say I would then exit after this hammer here. So yeah, if you see this reversal sign at this area, it's most likely that you're going over into a trend. And then you have the situation low, high, higher, low, and then it's pretty obvious that the 20 moving average, the simple moving average 20 uses, the market uses it as just a platform to bounce. Yeah, which is most likely. And that's why for me it's always, you see here, always a very good idea to exit parts of my trade. And as a management idea, what people always try to do is to get break even very fast. What are they doing? They move their stop loss, right? Now, question is, why do we use a stop loss? So, yeah. Yeah, maybe the fear, but basically, the stop loss should protect us from higher losses than we could accept. A stop loss is not to end the trade by randomness, right? So by moving stop loss into an area which is most likely to be touched, we just say to the market, can you please end my trade because I don't have the power to execute myself. I don't want it. I don't feel like this. I'm shy. That's what people do. If you really look behind the scenes, if you really ask, why are you doing this? No, I don't want to make this decision. Maybe I get more. No, we get stopped out. You know, like where's an example? Yeah, let's say here. See? Oh, I go break even. Okay, you're stopped out. I mean, I've my next profit target is at the other side of the bands. So profit target number 1, profit target number 2. But this is also, right, the perfect example. Then they got stopped out, break even, yes, but this is what follows. Not so yes. Right? So therefore, what is the benefit by exiting half of your position or 2/3 of your position at the simple moving average 20? What do you think? How much is in risk? Half exposure. More or less, not talking about the last cent here, more or less, you have the same profit like risk, more or less. So you already break even somehow. Why not just leaving a stop where it is? Just an idea. Because if the situation is the right situation, the market will not have the power to touch this point again. So whatever move comes afterwards, you might use it as a re-entry right here. And now as a stop loss point. So if you're too early, you get stopped out. Go through the charts, look at the charts, ask yourself, where would I enter? Where would I trail the stop loss to? What happens afterwards? You will be surprised how often you got stopped out without a reason. Anyone familiar with this? Took me years to get behind this secret. Maybe it's not one, but for me it was. So, but I think that's management, right? So that's gold. What else do we have? Euro to the US dollar. Yeah, it's a daily chart. T like TARC. So it's more or less going sideways. Yeah, you got in and then you get boiled like a frog in the water, you get stopped out. This happens. You get in, okay, you're at profit, market goes sideways, goes up, but not really a secret, not really a situation, not really something I could trade on or would like to trade on. You have like a very small situation, but if you add things up, like resistance here, you have a sideways market, you have like a reversal signal, okay, why not giving it a try? Let's see, it goes choppy. This one, failure. This one, yes, it's a signal, but not according to the strategy, but still I marked it. It's bearish engulfing, but you see it starts here and ends here, so it's already done. So no need to enter, but also the sideways market then just crawls slowly to the downside. Now you have another nice situation here. This one is a bit better, like with the bearish engulfing, with the morning star. This one, well, tended to be quite a good one. As you can see, it's not the newest chart, so 140, we're far away from that. Unfortunately, as I am in the US now. So, yeah, so again, you see the systematics, they are quite well and they're quite tradable. And of course, yes, you have some situations which just fail. And of course, there are some more situations. What do you think? A strategy which is designed to trade swings in a situation like we are in right now, will it work very well or will it fail? Like if you look at the S&P 500, maybe we can open some charts. Yeah. Yeah. So if we don't have any follow through in a correction, like just one period and bam, up again, by definition, the strategy fails. And it's not really a secret, it's obvious. Because this strategy is designed for trading reversals into the direction of the trend, against the trend. You always go with reversals. You can play this as mean reversion, and you can play this from one side to the other, going the whole 90 to 95% of all prices.
I have a question for you while I'm doing
Yeah,
this, if you don't mind.
Of course.
If you're done, if you're ready.
Yeah, I'm ready. So there's no other slide, and we
I
can
don't know.
go on charts if you like, but
Okay.
also I'm open for questions.
I'll try and open some charts.
Yeah.
But meanwhile, will you please let me know? I know that using Bollinger Bands, one could create a automated trading system
Yeah.
or an easily back-testable system. But with candlesticks, it requires potentially more subjective analysis. Have you explored automating candlesticks? Because I know people have in the past. Yeah. And my efforts to do so were frustrating because it's hard to define them. Can you elaborate, please?
There. And this is the beauty of technical analysis, and that's also the beauty of being human. Because we see and we can connect and we see things that automations will not see. But in general, you can, of course, backtest it and you can program it. I have an EA doing this. So the problem is with backtesting, what time frame, what management system? Do you add a little bit more or less? on top and below, or do you just enter with a stop buy or market, or do you exit parts of your position at the middle of the Bollinger Bands, or do you go with all of your position out at the middle of the Bollinger Band? So what will you do? There are so many possibilities for management, and I designed a strategy because of that, because we are human beings. When I show you this strategy, I'm very, very sure that if you tomorrow apply this, you will do something different than I do. And everybody of us will do it in a slightly different way. That's what the turtles proved, by the way. They were showing that you give a group of people one strategy and you have a lot of different results, a lot of different ideas on how to trade things. So therefore, the probabilities of really having the same trade are like zero. And therefore, it's very, very difficult to backtest it, from my point of view. Hmm? Yeah.
Sort of a similar.
Mhm.
Have you ever done like a back test create a wide trail to stop
No, I haven't done that, but I highly invite you to do this. In general, I'm not the backtest. Yeah, I'm not the backtest guy, and I don't trust backtests so much. Yeah, yeah. Backtests in general are quite a good idea to get some kind of confirmation that you're just following an idea that somehow pays off. But I highly want just to say, okay, it's backtested, and now I try one trade a week. Be sure it's a wrong it's a wrong trade, right?
I guess what I mean is
Yeah. Yeah.
Only because I know I trail stop.
Yeah.
But I get stopped a fair amount.
Mhm.
But when I catch it,
Sure. So this is
curious if with this strategy, you tried that or seen different.
no, I haven't tried it, but as you are obviously a trend follower, you can use a strategy for trend following. So use the entry, skip the management, go over to your own. If you're in a winning position, then go over to your own management system. That's also very important to understand. I never really got the idea. Now I know. Now I understand. If you look at these trading coaches or experts who sell you a system, you have to do it exactly like this, and then people come for the weekend, and then you feel like, yeah, okay, let's go. Poor people. We all did this, right? And then we wonder, why doesn't it work for me? It doesn't work because you will never be able as a human being to trade exactly like the other guy. It's not possible. From my point of view and from my experience. That's why I leave the strategy in general quite open. You have a lot of possibilities to put yourself into this, like going over into trend following mode. Yeah, you can do this. You can use the simple moving average 20 as as trading line, or you also have then the higher highs and higher lows, or vice versa. So you can work with this perfectly. You can go as a scalper where you just say, okay, I have a nice entry and I exit after risk reward ratio 1 to 1.5 or whatever. Just get the momentum done. It's also okay. You can do everything with it. No, no. If you add too much, I'm pretty sure you know by yourself. The more you add to your chart, the more sickness you get, and the more you have to question: am I doing this? Am I doing that? Oh. And what the biggest problem is, maybe you have some misleading information. One is like, yeah, it's a buy. The other one is, no, we're not ready yet. And the third one is, better sell. So then you're with your position. You're like, what to do now? At the end, we can never forget, we should never forget that prices, there's this random walk theory. I'm pretty sure you're all familiar with this. I'm not saying that market prices are random walk in total. That's why we do technical analysis. Otherwise, you know, it would be like having quite an inner conflict. But the price itself, of course, is random because two people, literally two people, agree on a certain action at a certain point for whatever reason. But as there are like an indefinite number of market participants, of course, they follow some kind of order. And that's what we try to figure out with the technical analysis. But yeah, so this is what we always have to take into account. And if you really try to put all the mathematics behind it, I'm not so sure if this is really a good idea.
Yeah, I'm having a good time here, Wieland.
Yeah.
I'm
Oh,
done.
looks great.
So I got this chart of the S&P 500,
Nice.
and it's got candlesticks on it.
Yeah.
And what are the two? Why do I have two moving averages?
Oh, you have an 8 or 12. That looks like a 10.
Pick the eyeball on the left.
Yeah, but he's hiding it.
Let's see.
Yeah, you have
Oh, I have another moving average on that. Okay, there we go.
Yeah. I mean, that's what you sometimes can do, like having a very fast 110, or sometimes I use 8. I don't use the 8 for entries and exits. I use the 8 just to see, you know, if the price stacks, and you can see this very easily, like let's say here, if the price is stuck between 8 and the other Bollinger Band, what will you expect? There is no reversals, there's no correction happening. It's so tight that you don't have any follow through. And then, of course, the strategy fails by definition. Right? So we always need some follow through. And most likely, even if the market environment is so strong, you see, the middle of the bands gets addressed quite often. That's all I need. And then you can also go, and that's another strategy I use. I have 3 according to the bands and the systematics. I mean, you can also easily just jump trend following here. It's the same idea, but not from the outside, but from the inside. Same idea. You can figure it out by yourself, or on my website. I explained it there very briefly, but you can do this. So this is what we want to look at, and this is how we can trade things. Yeah. So for example, this is another situation I'm looking at. The W or M formations. It's number 3 of my 3 strategies. Yeah, I trade futures. Usually I'm going to the US markets, are they most volatile. And I found myself in the NASDAQ 100 future. Sometimes the S&P, sometimes it's the DAX. Yeah, sometimes YM, which is Dow Jones. So around this. Sometimes euro to the US dollar. But these are then more swing trades. So yeah. But most likely, most of the time, these are the markets I'm looking at.
You enter, let's say it's a full bar,
Mm-hmm.
you want to enter above that.
Yeah.
That line. What if it's daily chart? You wait for the next one. It's interday. I can see you doing that.
Intraday, yeah.
Overnight,
Yeah, that's, well, the problem is if you have a market which is closed, you cannot do anything overnight. So you have to wait for the open, and then sometimes you'll find yourself somewhere, but not in an area where you want to place your order. That's a problem if you go with stocks. If you go with futures or Forex or crypto, what people also trade, you have an ongoing market. So therefore, it's pretty easy to go with a close and then just place all your orders and let things just happen. But for example, you can also wait intraday, so you have a signal on a daily basis, and then you wait intraday that the price comes back, and then you enter. Then also you get the pullback and enter with a pullback. So this is an option, but it's just an option if you have the time to sit at the market and wait until this happens. Or you put a limit order in the market instead of the sell order, a stop order, and get executed if the price comes back. So, or you adjust your position size to the recent actual price and enter market. So this is management too. Some more questions?
We'll come resume.
Yes, of course. Where?
This today. The day prior was a
Here. That's it's a shooting star, but yeah. People, well, what can I say to this one? It's so tiny. Yeah, people do this, and if you're lucky, you have the wow trait because you can apply quite a good position size with that one because it's so small and tiny, and position size. So you have this absolute risk and you have this percentual risk. So with this percentual risk, you have like a huge position with such a tiny candle that you're in wow. So it's like making big money. But it's most likely that it got stopped out with such a tiny candle because it doesn't have any impact. So there are two sides of the coin. Like with the spinning tops, they can be very, very amazing, beautiful turning points, but they also can just be a breather and then the market moves on with your position. So two sides of the coin.
not to commandeer the presentation, but in our FI 352 class, we had while we were learning about candlesticks, we had a really great example of engulfing candles, which are otherwise known as an outside day. And I think the most famous one that I have seen in many years, if not my whole career, was on October 13th of 2022. And it was this giant, to Wieland's point, giant outside day up far, and it was the well in the market.
Yeah.
We also had a really nice outside day that marked the July 27th peak, but that was a short-term to intermediate-term peak, not quite as powerful.
Yeah.
But I'd add that.
I mean, as students, and also as members of TSA, that the probability of occurrence of bearish and bullish engulfing is something like 80%. Right? And that's what I want to have. Shooting star, hammer shooting star is something with 60%, depending, but mostly it's 60%. And from there it goes. So people always are looking for strategies. Give me something with 60%. Here you go. Done. Easy. Hammer shooting star. So it's not that complicated. What do you think? What makes trading complicated and complex? Yeah, the trader. That's the problem. Not the market. It's pretty. But what happens is then, the papers say the market will rise and will continue to move. What do I know? But I have the signal. So we make it more complex than it really is. So if you want to listen to the market tells the story. And if you listen right, okay. If he fools us, we have a stop loss. Not a big deal. If we have one, well, that's what we better have. All right.
Thank you.
Thank you so much.
There were, let's see if there's one question.
One question. What
Yeah.
are your favorite movies or articles or newspaper? Question.
Movies. Oh, that's a good one.
First is buy this book.
Oh yeah. Sometimes I'm too shy. But I'll tell you one thing, with this book, you're always good. That's number one. And number two, I always read it when I'm traveling. I read it at the Golden Gate Bridge. I read it at Machu Picchu. I read it everywhere. Wherever I go, I read this book for pictures. So you can read this one. And of course, you have these classics. I mean, John J. Murphy, you have everything inside what you need to make the first steps and some more. Candlesticks, Steve Nissen. Learn about psychology. Learn about yourself. one of the most impactful trading books I ever read is not even a trading book. It's I always forget how the name of that guy. He wrote the book Power, 33 Laws of War. Not from that.
You know who it is? Of course, Mike.
Yeah, you see, I always forget his
Wait,
name.
is he the motivational speaker guy?
He has also,
Yeah, not Tony Robbins.
yeah, he's good for NLP. Robert Greene, exactly. One of his books where he goes into all these people who struggling always with themselves, the brothers Wright, all these guys, Abraham Lincoln. Abraham Lincoln was a guy with a newspaper, I guess. I don't know. Anyway, so go with that books. Read the stories with people really struggling with what they're doing and never give up. It's very motivating. And then you find yourself feel like, yeah, I just have to follow my path. But what you always have to keep in mind, people who are struggling and then at the end have been successful, they of course adapted to what they're doing to make things successful. So if you do something which isn't working, of course, make sure that you do something that works in the long term, and then it will work. As traders, when do we really lose? The moment we quit. Then we lost. In between, it's just like we're giving money from one hand to the other. Not really. I'm more self-learning, but I was lucky because I met on my journey to be a trader a lot of people where I'm listening very, very carefully. I do a podcast for 3 or 4 years now in German, where I interview traders. Of course, yeah, there's also an English version. The latest one I did will come out in May with Bruce Fraser about the good old times. So I always learn. And well, the podcast and the interviews, they have two ideas. One is, of course, it's fun to do all the discussions with the colleagues. But on the other hand, it's always like I always wanted to know how these guys could become so successful. But I don't want to pay coaching, so I made a podcast, and I got all the secrets, and they're happy to share. Of course, I mean seriously, but everybody's happy to share. That's what we do. If you have somebody who says, "Oh, it's a secret," you have to pay for it. Run, because there is no secret. The secret is yourself, and you just pay the time if you go for a coaching, right?
Will you tell us a little bit about IFTA?
Yeah, I'm happy to do so.
Yeah, we'd like to know.
Yeah. So with IFTA, as you mentioned, we have 22 countries all over the world. The most active part right now is Asia. So it's clearly Asia. We made a conference, an online conference in 2020. And this was very interesting to see because back then we had, like CMT as well, in-person conferences somewhere in the world. And we had just like 200 attendees, more or less, or something like this. Industry colleagues, rarely retail investors, rarely private investors, because entrance fee was like $1,000, and you needed to fly over the world like Kuala Lumpur, right? So it's quite a bit. So of course, and just people, or most of the people, they got there because the company paid them to do so, right? And in 2020, everything changed, as we all know. I mean, a lot of things changed. And we did this online conference, and we had over 5,000 registrants. And we were doing it with Zoom, and we had the 5,000 people package, so we closed the room. And we were really thinking that, okay, we have all these experts, Larry Williams, Linda Rushke, John Bollinger, Fran Tharp, so we had them all. And turns out we had just a couple Americans, a couple Europeans, and mostly almost 4,000 people from Asia. And goes, what? These were all retail. I feel, wow, these guys are active. And that was number one where I felt, yeah, a lot of things are happening in Asia right now. I mean, not just in trading, obviously. A lot of I go there. I've been literally everywhere, and I go in autumn to China as well. Things are happening in Asia right now, and in the future they will too, of course. So this is where we are most active. So Europe, yes, we're active in Europe, Spain, France, Great Britain, of course, with the STA, Germany, Switzerland, Italy. But most of the time, it's Asia, which is really Egypt. Yeah, of course, Egypt.
The most recent past president.
Yeah, Mohammed
Yeah.
aside. Yeah, true. Yeah, and in 2020 he gave the baton to me. But yeah, so with our member societies, we have over 7,500 members all over the world. And from the structure, it's institutional, like professional analysts and private analysts as investors and traders. Because honestly speaking, I mean, there is not really somebody doing analysis in a private basis, not just to execute a trade, right? So there's always a follow-up of the trade. So that's what we're doing. We started to do our conferences again in 2022. We started to have them in Melbourne in Australia. Then now recently we had it in Jakarta. Next year, or like now in October, we will go to Hainan in China. And we hope to maybe have our next conference then in 25 in the United States. I don't know yet. We are discussing this, or most likely then in Europe, that we can also switch the continents again. And I am in the happy position to visit most of the societies. I haven't been to the Lebanon, to be fair. So I've been to Jordan, and I've been to Egypt, and I've been to Israel, but I couldn't make it over to Lebanon. So yeah, that's basically it. And according to the CFTE certification, I mean, of course, we offer this program and we offer this examination and certification, which is well recognized worldwide. And it's done by private investors as well as institutional and professional investors. So both do it, and I think that's might be a difference between us and CMTE, CMTE Association, which go more for institutionals and professionals because of the ongoing fees, right? Yeah.
Also, there's a journal of tech analysis. It just came out.
Yeah, a newsletter and journal. So we have this on a regular basis where we, thanks for that, where we have some articles, some analysis, some strategies, some tactics. It's for free, and it's also just for free on download, on the ifta.org website. Yeah, so we have a broad we have a broad selection of webinars and recordings. It's for members only. So, but as you're a member of GSA SF, you already have access. At least you can register for this, of course. Yeah, right. Thank you so much.
So join the TSA. Thank you all for attending, and thank you, Wieland, very much for presenting.
Thanks for having me.
Thank you again, Anita, and thank you to everyone online who attended the Zoom. So we look forward to the next meeting.
Yeah, thank you.